So presumably you're just expecting this tit for tat or trade war or whatever you want to call it to continue.
Yes, so it was highly telegraphed, all of it's predictable, but I don't see it as a trade war or even as the beginnings of a trade war. It's more the brandishing of toy guns by two parties that I think want to negotiate and reach a negotiated settlement. The scale involved so far, $3 billion odd from the Chinese side, $50 to $60 billion from the US side. In the grand scheme of things, they're not significant. So I believe that this will, even if it goes to the next round, which is the soybean and aircraft round, I think it will converge and trade war is premature. But the main reason I think that it's unlikely to escalate, a couple of reasons. One is there's a portfolio of engagement between the US and China. This is one of them. At the geopolitical level, they're cooperating on North Korea. And then there's the whole financial capital account counterpart to the trade deficit, where China holds a large quantity of US Treasury bonds. Just last year, China bought an additional $150 billion of US Treasury bonds. The US needs China to buy even more of those as the US fiscal expenditure plan plays out. So that needs to be balanced, and that is also why I think that it's going to converge. And then lastly, it's not going to be costly for China to give ground on this. I think it should be possible for China to help Trump score a victory, which will have minimal economic cost to China, but possibly strategic gain in the long term.
But China has this surplus, doesn't it?
Yes.
I mean, do you agree with that assessment from Stephen just then, that China has more to lose immediately?
On a relative basis, they do. But China doesn't need to close the $100 billion gap straight away. It needs to give ground possibly on liberalizing its financial sector, which it can and does want to do anyway as part of its plan, possibly give ground on automobile imports from the US, maybe semiconductors. So it doesn't have to go the whole hog for President Trump to claim victory on this. It's more of a concern for third parties. Other countries in Asia export a larger part of their GDP to the US. The US is the largest consumer bloc in the world. And when you see that the US is having second thoughts about buying stuff from the rest of the world, potentially adding costs and tariffs, then that is a concern for those third parties. And also, China exports steel, but it also imports raw materials for that steel from other countries. And for third countries, it's more of a concern. But if it does get resolved, one of the geopolitical gains for China is that China will see more of a reliable partner than perhaps the US is on a relative basis. And that is what I mean by longer-term strategic gain. I think it's ease of doing business in China by foreign companies. The perception or reality is that it isn't easy unless you hand over the know-how in some sort of a quote-unquote unfair way. And that is ostensibly what Washington says they are addressing.
Well, thank you very much for coming in and explaining it all to us. Professor Lutfey Siddiqui there from the LSE. Thank you very much.